talking about how to increase accuracy. I think that there's a really big need for this right now. People marking levels and everything, and we first want to start just by defining TA. Technical analysis is just the first thing we do in a trade. We just mark levels. Like I've just marked out some levels just for easeability here. I'll just walk through them real quick. Daily level could possibly turn into an origin. This is a type of level I won't typically use. However, in this case, I've highlighted two levels here, a 3-minute and the daily. I think there's kind of both can be, let me take the replayer tool off and just cut it right here. I think both have kind of a point in case. The daily is fine. I won't typically use something that's that far back, especially when there's such a big break over it like that. And then there's no real levels in the drop of this move until you get all the way down to a 3-minute. So I think it's up for the debate which level it hit. I personally wouldn't use a daily level. I would personally use a 3. However, I'm gonna mark both. Okay, well, Control Z isn't working. There we go. I'm gonna mark both because I think that you could actually get away with either, since they're the same price. And whether you justify the 3-minute level, going back to this moment where there's, even if you go to a 5-minute candle, there's just nothing there. It's just like a huge drop. Even to this 5-minute stuff, it's like you're talking about like a solid 2-3% drop in within an hour of this thing moving around. There's half an hour, even almost half an hour, 45 minutes, there's a 2-3% drop. So for whichever level you're going to use, I'm just going to justify this as keeping both on this chart. And really what we want to do is I want everybody to start increasing accuracy and taking quality over quantity. So quality over quantity is a statement that I would say where you still want to take as many trades. So if you are taking 10 trades, let's say today, and I was to tell you I want you to take quality over quantity, that doesn't mean I don't want you to have less than 10 trades on the books. It just means I want you to increase the quality of your trades by finding better spots. So that's what this whole lesson is going to be focused on, quality over quantity in trading. And that all goes into increasing accuracy. So again, if you were to take 10 trades, I still want you to have 10 trades on the books. I just want those spots to be better quality. So I'm just going to kind of walk through this move, talk about a few of the things that I would do to increase my quality in trading. And then this is going to help a lot of people, I think, with quality over quantity in trading. And finding also getting into longer term position trades and swing trades, because I think when we have high quality positions, it allows us to justify position and swing trades more, which really everybody should be getting into position and swing trades. Yes, we are day traders. Yes, we use technical and comparative analysis, but once every few weeks, there's sometimes a trade like this where if you get into it at the right spot and you're just holding it, that's where your big trades can manifest into those 900, 1,000% trades. And I think it's healthy to, once or twice a month, mix in some of these bigger trades. And it's really tough to justify them and to be in them when quality is low, but quantity is high. So quantity is a good thing if you're constantly scalping. So there's two gears to this. You're constantly scalping all day long. You want to make 30%, 40, 50% per trade. Quantity is your game, but also with that, quality still has to take a part in this. So I'm just going to walk through this trade, talk about how I would increase my accuracy and look for quality over quantity without sacrificing the amount of trades I actually put on the book. So very simple daily trend here. We're going to use a lot of +1, -1 theory because that's going to be the backbone of a lot of the stuff we do. Up here, I'd also like to mark what could be a daily break right here. So I do want to see this. I do want to be aware that this is our daily break. And the range can exist, up here above that. So we do have a daily, we do have something behind it that could go and create a ladder from here. So this is kind of the first thing I'm going to be looking for. What can we hit inside of this candle here, whether it be a 15-minute level? I'm not sure. I haven't looked, but for now, I'm just going to float out a 15-minute level randomly on some spot. And then, how do we attach trend and then use this going forward as a level where we would say, okay, well, now we took a break, we laddered it, we created the interior trend. The same thing we always do at a higher level, looking at all the possibilities of what could manifest based on what we have on our charts, right? This is very much your technical analysis is marking this one. Marking this one is very much your comparative analysis, right? Comparative analysis is going to be always finding those different spots based on what's happened. So always just technical analysis first. With this said, we're just going to start moving down timeframes to find quality spots, instantly just going to the 4 starting at the bottom of the move. The first objective of this trend would be to create a 4-hour level here, which it did. So I just want to take a look at this. We're going to assume that no knife catches are being had. So what we're now assuming is that we're not taking any knife catches, but we are going to be finding positions where we can justifiably make sense to them. So daily level +1 -1 means we need to gain the 4 hour, which means there should be an hourly level that we could gain. And if that hourly level gains, we can possibly take a rebuy on the 15, right? So you have your daily hit here. The 4 hours created here. So the 4 hours created afterwards. We cannot use this as a 1 hour candle because at that point, this daily hadn't been hit and created yet. So, the daily had been hit, but the 4 hours created the next candle. So we have to always move forward in time. So technically it would be this one. So the first thing I'm going to do is work with this. So you got a 4 hour, you need to gain that, right? There's the hit of that. And I wonder actually, that 4 hour happens there. You hit that, you've got your 4 hour level. That's fine. Now we need to work on gaining this hourly, right? So like, assume we're not in any trades yet. Where do you get into a trade, right? Oopsies, I don't want to speed it up like that. Okay, so you've gained your hourly level and that's when you see this thing pop, right? So if you kind of go back here, you can see the daily hit, that level to gain, the hourly, right? So everybody's kind of caught up here. We've got 4 hour, we've got hourly, you've got this hourly gains right here, right? You've got the hard close there. Now we would need to find the 15 minutes. So let's just take this thing back just to this point here. So we've met the criteria now without knife catching this to say, okay, this move is established. It has hit the daily. It has a 4 hour hold level. That hourly is in front of that 4, right? And then we're going to go to the 15 and find entry on this trade. So you've gone above that. Where does it break the move? It breaks the move right there. So now we need to find a 15-minute buy here, right? Inside of here. So that would be this guy here. So any retest on this should be entry. You could go and get really greedy and go down here. But then really this is just engineering out the 15-minute trade, right? We're not knife catching anything because we're just simply focusing on reducing risk here. There's a touch of the hourly. There's the 15. Perfect. Holds the move. Doesn't ever hard close it. And then that's perfect, right? So you've got your 15 here. You've got your 15 here. Up to you to decide which one to take. But, you know, I think always we can agree that going for the lower level always makes more sense, right? You've got the hourly break. You've got your 15-minute hold here. If this can hold the move, what can gain that 15 is the 5. So as soon as you have a 5-minute candle break over top of that, it's kind of game over, right? So you have your 15 there. This is the candle right here. That's kind of game over. At this point, I don't really see any entry to be left on this move. And that's probably where it just goes straight up, right? And so I'm going to take this level. I'm going to move it to, we break that there. You know, once you gain this 5, getting over top of that 5, the move is over. Like it's gone. You have to have been in that trade. So really the 15-minute is the entry here. And after that, you know, you can see how this move stabilizes, simply moves up, and we don't have to worry about knife catching anything. We have a daily level down there. Daily levels hit. You have a 4-hour hold. In order to get the 4-hour hold, the first is the hourly, and then the 15-minute to the 5. So you can see how that trail works in succession to constantly gain this move. You need to get over that 4-hour. In order to do that, you need to hard close the daily. And if you hard close the daily, your 15 is going to be the re-entry post this. So you can notice how in all of these trades, every time frame is in front of each other. You hit the daily, you've got your 4-hour hold, hourly's in front of it, 15-minute is in front of the hourly, 5-minute is in front of the 15. 15 is your entry to confirm the hourly, which holds the 4, and then the 5-minute is like, that's it, last call, right? So that's one example of how you can increase quality of trade, right? So you have your master time frame that creates, which is your daily here. You have your 4-hour, which you know you need to gain. So there's no entry based on this 4-hour yet, but there is criteria that if we gain this 4-hour, we know that in order to gain this, we need to gain an hourly first. We need to hard close the hourly, which is what we do here. And then the 15-minute, right? The hourly hard closing will confirm us gaining the 4. And the 15-minute will confirm that hourly. So it's almost like the 15-minute confirms the 4 in a way, because it's 2 degrees of separation. And you have a 4-hour. The 1 hour has to hard close, and that confirms your entry on the 15, right? So your 15 is your entry to this trade before you have a huge move. And that's just a simple way to say, look, you have a daily here. We don't need to always or necessarily ever worry about, you know, knife catching the stuff that's back here. Sometimes you can just let your time frames play out and then get in your trade after. And this is how you start to engineer your longer term trades, your position trades, your swing trades. You see your highest time frame establish. You allow it to, especially after a big move down like this, you see your highest time frame establish. You allow it to create your +1, -1 scenarios, and then you simply take your rebuy on the 15, right? And your rebuy, oopsies, your rebuy would have been So let's actually rewind this and talk about how we could have handled this trade. So you broke that hourly on this candle here. So you would really have been entered right here on the trade. You'd set your 15, you'd be entered. I wouldn't use a break level in this scenario. Like some people might say, okay, what about a break level? I wouldn't use a break level because I'd want to be moving up, not down. If it did hit this break level, I would probably be quite a bit more cautious in entering this trade, because I would say, hey, we have the hourly, the 15 hold level couldn't hold it. Really, it's a 15-minute hold level. So that's really it right there, your 15-minute level. At this point here, your entry's pretty good. You've only got negative 0.1%, so 10% on 100x. At this point here, you know, all you're looking to do is have this 5-minute hard close, right? Because you're getting above and holding that, and then you've got a 5-minute above that time frame as well. So that hard close is going to pretty much confirm that trade. So if you were in this trade and you saw this 5-minute, this would be your stop, right? Like you would stop out here, but you wouldn't need to, because it's just going to move up from here, right? And then you have that trade being engineered, and you can see exactly how quick this thing moves up. So if you entered 15 here, not only is this a quick 3% trade by engineering it off the highest time frame, you didn't have any risk, and in a way you're increasing accuracy, because instead of setting a trade here and then here and then here, and being in 3 trades where you got stopped out of 2, 3 trades with 1 successful trade, you can literally just wait for it to hit the highest time frame. And that's one part of engineering it off the bottom. And then imagine you have one of those I've done this example before, but I want to do it again. Imagine you have like a volume slider, right? On your charts, like an amplifier, where you can slide to go to the volume all the way down, all the way to the top. You know, you've got 2 of these. As you increase quantity, you turn down accuracy. As you increase quality, you turn down quantity. So this is an example of not taking a ton of trades, because this would be quantity 1, 2, 3, 4, right? A higher quantity of trades with a lower quality, because you're in, out, in, out, in, out, in, out. You don't know for sure. And this is what you would do if you're a scalper. Enter, exit, enter, exit, enter, exit. If you can manage to pull off all the levels perfectly, enter, exit. But there's never really a bigger play. If you get really good, you can mix them both. But you know, the thing about trading, it's 1-to-1, where quantity is a versus against quality. You cannot have both. You either take quality trades or you take quantity trades. Higher quality means you get in less trades, but it doesn't mean you're actually putting less trades on the books. It's just instead of, and we're going to get into that next, it just means instead of taking as many trades, you're still taking the same trades, you're just diminishing them down to the best spots. So that's one example of increasing quality. Let's continue on now with some levels we have marked. So we have whatever you want to call this, whether it be a daily or a 3-minute, it doesn't matter. So fine, your daily level should be your max target here, mirror out. We're not even, like, we already know it hits that, so there's no point in even, you've got also a hourly origin here, which has been established. So fine, you hit the daily there, right? And then we're just going to do the same thing. What we're going to do is we're now going to look at the entirety of this move. So the first thing you would do is you'd say, where's the 4-hour targets, right? So like you've got a few 4-hour targets here. You've got one right here as a backside. So we're going to mark this as a backside. You've got a reverse right here. So you've got 2 4-hour levels. So initially what you would do is you'd say, okay, this is perfect target, and it might look like perfect target, but there's always quantity versus quality. And this to me is a quantity trade, because for this backside to hold, the first criteria we need to know and understand is that it actually just has to hold. So it could go all the way down here and come back up. That's a bit of an extreme example, but as long as it holds the move, this backside is technically still holding, and then it'll go back down again, hit a trend, and then it'll reverse the backside in the future, and you know, creates this kind of trend like this. So like this backside is always in play unless it's hard closed, and you know, you close a candle under here of the right color, and then that's gone. For now, what we need to do is focus on the quality of this trade. So how could we increase quality on this trade? Well, the first thing we can do is we can say, here's the range, right? We're just going to take this one and we're just going to make it, let's go with this color. I don't know what this color is. We don't use that one. We're just going to use this bottom of the range right here. So if you were to start to want to increase the quality of the trade, you take this bottom of the range is right here. The reason that's the bottom of the range is because on smaller time frames, it can create trends no matter where you go. So now you would simply start going down below this, +1, -1 this, and start finding your levels, right? So now we're left with, okay, here's the 4-hour backside. How can we increase the quality? If we were to take this trade, how can we increase the quality of entry, right? Well, you just +1, -1. You've got a 4-hour target here. You've got your daily here, which means your 4-hour target's going to be here, +1, -1. +1, -1 to that is the 15, the 1 hour. Are we able to find a 15? 15 right here. The problem with this 15 is that, just get it to the right line. Problem with this 15 is that it's actually all the way up here. So the hourly is a better trade. So now you're getting into disconnected time frames. So let's go to the 5. Is there a 5-minute level here that we can find? There is down here. It's been tested. We don't want that. So maybe you have this one here. That's tested. So then maybe you end up with this here, but that's above the hourly. So now what we can do is we can mark this here, because we're just trying, the whole purpose of this is just try to increase the quantity of this trade. So you've got this all the way up here can be tested. So technically this is kind of the perfect level. Or you could reverse the 1 hour. Like, your choice is there. You can say that, and this has got to be personal choice based on what you feel like is happening. If you're noticing a trail of 5-minute moves and this is the next one, well, probably your 5 minutes is the best one to take. If you have this level here and you're going to measure against them to say, okay, it's only 8% difference. Probably better to take the 5-minute, although you could get an 8% better entry on the hourly here. Just mark this as an hourly. Do I think it's right to take this level? If you were going to buy the 4 hour, I would have bought this instead. So if you were to buy the 4 hour, I would have reduced it by 20% to buy that. But at that point, would I take the 1 hour wick against the 5-minute body? No. I would simply go for this. I would go this deep dive to this, and this hits this with a possible deep dive to the body of the candle. And again, all you're doing is you're saying there's that 4 hour level, +1, -1, increase the quality of trade by just deep diving the targets and finding them. So let's kind of walk through this thing, see where it goes next. I mean, I already know because I did this example yesterday, but that's fine. And then so you have your perfect touch on your hourly, because all you did was just like we did in the beginning of this video, was take this and +1, -1 it down. The most important thing about doing all this is having the correct targets, because if this 4 hour backside wasn't the correct target, none of this works. If you're using this instead, none of it. Well, this one would still work, but let's say you're using, the front side, you miss everything, right? So like the backside was the right level here. That's confirmed with that first touch, but then increase the quality of the trade by getting into more stable trades, right? And then opposite on this side, if you are building this off the daily from up here, your 4 hour would be target. So you should technically be entering from here to the 4 hour, and it should be a pretty straightforward trade, right? Because you're just +1, -1 to that target. You're just taking this daily. You've hit your target on the bottom. That should be kind of your max target. It has been hit. You can look for deeper targets, but I would expect a pullback before we go. I would expect it to hit that 4 before you pull back and go to something like this, which is the 5-minute level. There's nothing else really there. Every other time frame is disconnected. If you had an hourly that you could engineer off here somewhere, sure. I wouldn't use this. I would try to deep dive the 4. You have the hourly here. So then you have a measurement of probably 1% or 1.8%. Just move this to here. And then really that should be your trade engineered perfectly. Your +1, -1 is here. You don't have any hourly candles inside of that. So you would never use the hourly here. You would just go straight for the 4. There's a 1 hour, there's the 4. Actually just hits them both pretty perfectly. Yeah, right there, hourly 4. So it's just how we increase quality in trading is we always have to take any time frame we're looking at, and we have to break down into those time frames to find a higher quality instead of, and that really should be a huge focus for everybody, is increasing quality in trades. And then the other deep dive to that 4 hour target, if you were +1, -1, it would have been right to the hourly origin, because the 4 hour, once it tests, and if it can't hold, it's going to target the hourly. And we do know we have an hourly here, which is this right here. So once this 4 hour tests, it pulls back, and then it's going to go after that next target, which is just your hourly target. I think actually it's still fighting this hourly right now. Yeah, it's still, oh no, it broke over that hourly. So that was a pretty critical level. Let's just rewind this for a second here. So this hourly was obviously a pretty critical level. And it's the same thing. It would be the same thing if you were looking for entry on this. As an exit target, you have 1.8, 2.3. So you have an extra 50%. So I think that's personal choice. Like when you remove all these levels, let's remove some of this clutter here so we can just get everything easily seen here. We're going to take this 4 hour off. We're going to take this hourly off. We got this 4 hour. We got this hourly. It's the exact same thing. When you are taking this 4 hour level right here, let's just make that yellow again. When you are taking this 4 hour level, we're going to remove this 5, and you're deep diving to this hourly, it's going to be the same thing here. Quality over quantity. you can take your exit at the 4-hour level for your profits. When you're taking profits, I'm less concerned about perfect quality. I'm more concerned about locking up profits. If you have a daily goal of 1.5% and you can hit 1.8 here and you pass your goal, great. As an entry, I would never enter this 4-hour. I would always go for something deeper in the target. This technically is correct, but we want to increase quality by removing risk. And then it's the same thing here. You actually don't even have to take this as an entry. What you could do is you could take the 15-minute hold level to confirm that that hourly is going to hold it down. And if that doesn't hold it down, then you're probably going to break the move. And then it's the same thing with here. You're taking this hourly or this 4-hour, you're breaking it down to the hourly. We didn't have a 15. We had a 5 that was right beside it. The 5-minute was slightly above it. It hit all levels. But if we're playing this 4-hour, and this is the question we always have to ask ourselves. If we're playing a level, how do we increase quality of trade? How do we increase quality of entry, right? Enter here. This exit is perfectly fine. I'm okay with that. I'm not okay with this as an entry. This as a knife catch entry, with how high this went, I'm also not okay with that. What I would rather do is increase my quality by reducing my knife catches and saying, where's the 15-minute level? That hourly got hit, play the 15-minute level. If the 15-minute level can hold it down, and I don't care what part of it you play, you want to play this part, this part, this part. I think there's like a 0.1% difference here. I don't even know if it's measurable. Let's try. Okay, 0.5. It's actually okay. It's not that good. It's fine, but it's not that good. This would be the level that you play. And then this would have to then engineer down a 5-minute hold level. So this would then have to hold. So your stop's pretty thin here on this move. Your stop is pretty thin. You could maybe take a little bit more of a risk and, backbone it off that. But when you start breaking this 5-minute, like you really should be out of this trade, right? Like that's where you can have complete control over the trade. Because if you've entered here, the 15-minute can't hold the move, right? And that the 15-minute is where you entered and that 5 can't hold it down. Like, I don't think this is a safe trade. I think at this point you need to be out of this trade because it's telling you you're going to break the move. Now we can just go to a bigger time frame. Yeah, exactly. See, it's just telling you that you're going to break the move because that 5 minutes not holding. Your best case scenario on this trade is you made 20% and you assumed all the risk for 20%. Let's remeasure that. You assumed all the risk for 30% and you actually went negative 15 to make 30. Like it's not a very smart trade. And then when you're back to that and you have, your 5-minute level right here and that's not really holding the move. You can see it right there. It goes and holds a move. This is time to exit the trade. This is time to exit the trade. You've got your, actually, sorry, it would be back here because it would have been on the first touch of that. It would have been right here. When you start breaking this stuff, like it's no matter whether it happens here or here, if this 5-minute can't hold it down, you're out of the trade. And you'll notice this 5-minute doesn't hold it down at all because it was literally had to be the 15 that holds it down. And that 5-minute level would have had to be something underneath that 15, right? You hit the 15 there, 5-minute levels here. You're already breaking it in the moment. Like, you would have needed to bounce this and hard close and move down, right? In order to have that. So that's very, very straightforward. And that's again how we can increase the quality of trading. Don't enter the hourly if you don't have to, right? Like you can knife catch these things, that's fine. But if you're gonna knife catch them, like this is a knife catch here. This can't be a knife catch down here. This is engineering a longer term trade. And then, if you were in this right now, you'd be up, I don't know where this thing ends, but let's take the replayer tool off. Okay, so it actually goes up quite a bit more. No, you're up right now, 6.5%. Actually you'd be in from here. So it's not quite, it's probably it's 5.5%, 6%. Yeah, 5.5%, 6%. And you're still moving up at quite a large pace. So whenever we look at any of this stuff in trading, and I want to talk about this a bit more, why we would go down here before I stop. But before we do that, anytime we're in trading, and I can repeat this a million times right now, quality over quantity trades. And the way we find quality is by number 1, marking the correct levels here, 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 having the correct levels on your chart so that when you mark out the next stuff, so TA has to be 100%, so that when you're working down into finding these trades, just like this hourly +1 -1 to this, to the 4-hour +1 -1 to its hourly, you're working with the right information because if your levels are wrong, the whole thing's broken, right? And let's talk about this a little bit before we finish here. So this here, when you're looking at a range like this, right? Let's just actually rewind it a bit more. When you are looking at this and you're asking yourself, how deep can this thing go? you want to stay within the interior range that can support that move. So I identified this instantly, just visually. Here's a 4 hour. Anything below this, you're just going to be breaking down into a new into a new range completely. Like this is the very bottom of the range. So when you are here, what you need to do is start going through these time frames to say, what's the biggest trend that can be made? So like right now we've got an hourly, but this bottom of so far, this is the bottom of the range would be this, because we don't have anything else. We have a 15-minute, and that's exactly what you want to start using. Is you want to find the highest time frame that allows you to have that as well. So you have a 15. Now let's color code this actually. That's blue already. That's your hourly level. This is the bottom of the range. So you actually have a trend you can use in this to see if you are going to be breaking down, right? Like you lose your interior trend, this is going to be gone, right? And that's how you identify the bottom of the range, is where you can see what trends and what levels are at the very bottom of the move. So you just keep going here, just let this thing kind of find our target. I'm just going to hit play. Okay, right there. So then you have at least something where you can say, hey, I have trends here. And then you've got a 15-minute interior right here, and you've got the hourly right there. You just hit play and let this thing play out. There's the hourly, there's the hourly, there's the hourly, there's the 15. And that's how you're identifying the range, because you're going to be able to see how this thing is followed perfectly, whether you start with the hourly range trend there or whether it ends up being a 15 here. Clearly we can see it's the hourly, we can delete this, but that's how you find your range. And that's how you also find your range trends, is by going and visually looking and saying, here's the bottom of the range. There's a level it has to hold over, right? Backside level, or at least stabilize against the target, right? This invalidates it as a backside, so we can delete that now, but at least we were able to use it to find our target and find our trend. And I don't think it actually hits again, but this will be a pretty important trend for this move, which is your hourly range trend, which then that's going to, now we can take this is not important. Now we can see where the ranges exist. So I'm just going to quickly take off the replayer tool, and I'm just going to draw some boxes right now. So the current range would be to here. So you'd have to stay above this. Once you break below that, you're going down to here is your next range. Once you break below that, you're going down to here. Once you break below that, you're going down to here, right? Or here or here. And then once you break below that, you're going to here. This cannot be part of the range. This will be the final piece of the range. And that's it. So that will also give you how far and deep the range goes in the move. When you can time frame down, find the level and the trend, that gives you where your range ends. So your range won't end here, your range will end here.